My name is Louis Miller, and I'll be presenting to the American Cancer Society on how to navigate the highway of IRS regulations. Because the Board of Directors of the American Cancer Society come primarily from the medical communities and the lay communities, it's important to have a legal understanding of the IRS regulations in order for the American Cancer Society to maintain its tax-exempt status. The purpose of this presentation is to 1. Inform you as a Board of Directors of the IRS regulations that govern 501(c)(3)s. 2. To provide information on Form 990 and other employment tax issues that ACS may face. And 3. To provide insight on what can jeopardize the 501(c)(3) tax-exempt status of the American Cancer Society. Form 990 is a form most 501(c)(3)s are required to file. It helps to verify compliance with tax exemptions. Since the ACS has 11 geographic divisions, Form 990s must be filed for each individual division. Good record keeping is important in order to ensure tax exempt status is maintained. The first question that should be asked is, what records should be kept? For each division of the ACS, the following records should be kept. Money coming in, this includes bank deposit slips, invoices and receipt books. Money going out, which includes all purchases that are made, such as account statements. Next, employment tax records, which include salaries, wages, and benefits paid. Now, these records are very important due to the high number of people that the ACS employs, so this will be covered more in detail later on in the presentation. And lastly, asset records, which includes assets the organization owns and uses in its activities, such as investments, buildings, and furniture. For employees, the ACS must file federal income tax and FICA taxes for each employee, which includes Social Security and Medicare. For volunteers, while there are no tax responsibilities, the ACS must be mindful of what gifts that they provide these volunteers for outstanding service. If these gifts are non-cash items of nominal value, then they should not count against taxable wages. An example of non-taxable items would be a ham, let's say, on Christmas. If these items are cash and could be a gift certificate or anything of that nature, then they must be included in the volunteer's taxable wages. Giving a volunteer cash will turn them into an employee, and the ACS must be mindful of this. As a 501(c)(3), maintaining tax-exempt status is a top priority. As directors of the ACS, it is critical to understand some of the things that can jeopardize that. One being unrelated business income, or UBI. The gift shop is one activity that can produce UBI, and this will be explained in the 3-part test. The first part of the test asks, is the activity a business? In the case of the gift shop, yes it is. It sells everything from t-shirts to coffee mugs. Part 2, is the activity regularly carried on? Once again, in the case of the gift shop, yes it is. The gift shop operates the same way that a non-exempt organization does and conducts business throughout the year. Part 3 of the UBI test asks, is the activity not substantially related to the mission of a tax-exempt organization? This criteria has some gray area. Any income-producing activity that does not directly further an organization's exempt purpose could generate UBI. In the case of the gift shop, one can argue that selling merchandise online does not directly contribute to the mission of the ACS, which is to eliminate cancer as a major health problem. Also, UBI can't be produced if the activity is conducted on a larger scale. In the case of the gift shop sells merchandise to the general public, which can be seen on a larger scale. In 2012, the UBI of the ACS was a little over $51,000 of the total revenue, which was a little over $370 million. Now, this isn't a large percentage and it's nothing to worry about, but it's just something that should be kept in mind. For future reference, any income from trade or business where uncompensated volunteers perform 85% or more of the work is exempt. This can be useful with the organization's huge pool of volunteers. Like unrelated business income, lobbying is another activity that can cause organizations to lose its tax-exempt status. Organizations that are charitable in nature must adhere to a variety of requirements. Legislation states that no substantial part of the activities of the organization may constitute carrying on propaganda or otherwise attempting to influence legislation. There are three ways that you can measure substantial. One way is to determine what percentage of an organization's annual expenditures are devoted to efforts to influence legislation. Two, you apply a percentage to the legislative activities themselves in relation to the total activities. Three, you ascertain with hindsight whether an organization has had substantial impact on the legislative process simply by virtue of prestige and influence. According to the 2012 ACS Stewardship Report, the American Cancer Society granted more than $25 million from September 1st, 2011 to August 31st, 2012 to support applied policy analysis, direct lobbying, grassroots action, media outreach, and litigation for the purpose of accomplishing the Society and the Cancer Action Network's advocacy goals. The ACS Cancer Action Network utilizes expert capacity in lobbying, policy, grassroots, and communications to amplify the voice and support of laws and policies that save lives from cancer. They also work to encourage lawmakers and policymakers to support necessary investments in research and prevention. While the IRS has not penalized the ACS for the Cancer Action Network lobbying efforts, as board members, you should be aware that the organization is walking on the tightrope. To be on the safe side, let's discuss what the Cancer Action Network can do to stay within IRS compliance. The organization can engage in nonpartisan analysis, study, and research, and can publish results but cannot advocate the adoption of legislation or legislative actions to implement its findings. To remain within IRS compliance, the Cancer Action Network should partake in these activities and limit its lobbying efforts to avoid any type of issues. As a 501(c), engaging in political activities can cause an organization to lose its tax-exempt status. The prohibition states that nonprofits must not participate in or intervene in, including the publishing or distributing of statements, also must not engage in any political campaign on behalf of or in opposition to any candidate for public office. Participating in these activities will classify the organization as an action organization, which can cause that organization to lose its tax-exempt status. While the ACS has not engaged in any overt political activity, as board members, you should be aware that unlike the rules regulating lobbying activities, the rules of political activity are more absolute. The ACS should avoid getting too close to public officials regardless of how much those officials' views might align with those of the ACS. Like the rules regulating lobbying, voter education activities are allowed, such as instruction of the public on matters useful to individuals and beneficial to the cancer communities. A charitable organization can prepare and disseminate voting records of legislators on a variety of topics and conduct public forums where there are fair and impartial treatment of political candidates. The ACS should shift to strictly informing the public on cancer-related issues versus continuing to participate in activities that can be perceived as lobbying or political activities. While there are hours upon hours of material to cover, due to time constraints, focus was placed on issues that were most relevant to the ACS. Now that you're more informed on some of the IRS regulations, let's plan for the future. We will have quarterly meetings where we will go into more detail regarding IRS regulations and apply that information to current activities and state of the ACS. Each meeting will be roughly 30 minutes, a 20-minute presentation followed by a 10-minute question and answer period, so please come with questions. For any additional information related to IRS compliance requirements, please visit www.stayexempt.irs.org/ and click on the green Existing Organizations tab and the orange In-Depth Topics tab. Thank you for your time and attention.